back. You're listening to Houston Real Estate Radio. I'm your host, Shanna Register, and every week we bring you news and information you can use on your next real estate transaction. And maybe you've thought about purchasing a home, and that's what we're talking about this segment. We are talking about a brand new loan product that's out. It's actually been out a long time, but it's changed because of some things that happened last year, so we're going to talk about that. A new loan product for seniors who are over 62. Really interesting stuff, so stick around, listen up. A lot of great information. But first, I want to give you the call-in number in case you have a real estate question. You can call us. That number is 281-882-8088. Every week, we answer your questions right here on the air, 281-882-8088. All right, I've got Vicki Cheers here in the studio with me. She's with Security One Lending, and she is going to talk about a new product that they have. She is a HECM for Purchase Specialist, and you're wondering what HECM stands for. Welcome to the show, Vicki.
Well, thank you for having me. I appreciate being here.
So tell us what HECM stands for.
HECM stands for Home Equity Conversion Mortgage. That's actually FHA's name for the product, and it's just the acronym that we use to refer to it.
So after somebody listens to this segment today and they want to get this HECM loan, they just need to call you, the HECM loan specialist, and tell you that's what they're interested in, and you can get them qualified.
Absolutely. That's all it takes.
So the best thing that I see about this product is that you can buy more home than you thought you could, and you don't owe a monthly payment.
That's exactly right.
I mean, it's a miracle product. I love it. And it's only for people who are 62 and older.
Correct. It's for our seniors, correct.
So this home equity conversion mortgage, it's also known in short as the H4P. Is that right?
That's our nickname for it, yes.
Oh, your nickname for it, H4P. Okay. So it's an FHA loan.
Yes.
And so it's regulated by FHA.
Yes, ma'am.
Okay. And one of the things that if you're going to use this loan product, you want to make sure you have a realtor who's been trained on it. They actually just changed our real estate contracts for purchases, and they just added a new addendum for using this type of loan. And so you want to make sure if you're going to do this that you have a realtor who understands the product and how to use it and use the new contract and the new addendum with it. And all of our realtors at Register Real Estate Advisors have been trained on this. So you definitely want to use one of our realtors if you're going to do this. So Vicki, tell us about the product. What is it?
Basically what it is, it's a way for seniors to access equity in their home, in a new home. So basically what happens
in a brand new house.
In a brand new house. So they can go find a new home. I'm going to plug in the value of the home and their age, and that calculation is going to tell us how much money they need to come to put down on the house. The lender will put up the rest, and they will close in that loan the first time with no mortgage payments ever.
So this is going to be a brand new construction from a builder.
Correct.
And they can close on it. And so the house costs $250,000 that the builder has, and they can close don't need the full $250,000, and
Correct.
Yet they close and don't have to pay a payment on it.
Correct. For instance, a 68-year-old would only need $122,000 approximately on a $250,000 house, depending on their age.
So the great thing about this is a lot of seniors have money. They have the money in the accounts, and they say, okay, we're going to go and pay cash for the house. But the problem is once they use that cash, then they're short on those monthly expenses money, and then they have to really live on a tight budget. This allows them to keep their money in the bank and only spend part of it on to get their home that they want, and they can get their dream home. So, for example, so you have to be 62 to qualify. But for example, on a $250,000 house, if you're 62, you would only need to bring $130,000 to the table.
Correct.
And if you were 80, you'd only need to bring $109,000 to the table on that same $250,000 house.
Correct. Our older borrowers would need to bring less than our younger borrowers. That's true.
Okay. And the great thing about this is now you qualify for this $250,000 house. You can actually upgrade it and make it into a $300,000 house.
Yes, because your money goes so much further on this product.
Going from a $250,000 house to a $300,000 house at age 62, you'd then only pay $155,000 for it. And that's not the $50,000 you'd be getting in upgrades. That's less. That's only $25,000.
Right. For $25,000 additional funds at closing, you would have a $50,000 better improved home.
So what do you need to do to qualify for this mortgage?
Basically, we're just going to plug into your the calculators are your birthday of the youngest borrower. We're always going to base it off of the birthday of the youngest.
So husband and wife, he's 62 and she's 63. You're going to go off the 62.
I'm always going to, we have to go off the youngest one. Okay. So we're going to plug in their age, and and then we're going to plug in the value of the home, and that's going to tell us how much they need. The only thing we have to make sure of is that the funds that they have that they're going to use to close hasn't been borrowed. So, we need it in their retirement accounts or from the sale of a previous home, wherever they got it from. They can get a gift, but it just can't be borrowed.
Because a lot of seniors want to pull their money out and go buy their house, and their financial planners are going, no, don't pull out all your money and buy the house.
That's correct.
This is a
financial
great
planners
solution
would
to
much rather have them, if they can get a $300,000 house for about $150,000, it's a much better solution. The senior's in a better, improved home, new home possibly, hopefully, and they didn't pull out all that cash.
Now, it can be used on a resale home as well. So if they find a resale home, they can purchase that as well. But on new construction, as long as the home is fully built, they can purchase a new construction home.
That's correct. Right.
All right. So let's talk about we talked about kind of our minimum, what the minimums are that they need, but you didn't mention anything about credit or income.
Amazing. Yeah, we don't need those things.
You don't even check that stuff.
No, we're going to check their credit to make sure we're looking if there's anything federal that needs to be paid. But we're not going to look at their credit score qualification because we don't require monthly payment from them.
So they're not going to pay a monthly payment, but they are going to have to pay. They're going to have to pay their HOA if they're in a homeowners association. They're going to have to pay those dues every year. They're going to have to pay their taxes and insurance.
Yes, ma'am. Yeah, they've got to pay ongoing property taxes, insurance. They have a mortgage. They just don't have a mortgage payment. Okay. So the requirements for taxes and insurance are still there.
Okay. All right. Wow. It's really an amazing product. So there's no minimum credit, no certain amount of income that you have to have. You just have to be able to cover those three things.
That's
HOA,
correct. Right.
Taxes, insurance. All right. What about the property? Does the property have to qualify?
Yeah, it has to meet minimum health and safety standards for FHA. So we're going to, when we send the appraiser out on an existing home or a new home, we want to make sure that it's a sound home for our borrowers. So they do have to meet the minimum health and safety standards for HUD.
Okay. If the house, if on a resale home, it's needs some repairs and upgrades, but it appraises, is that okay?
It depends on what the repair upgrade is. And the borrower can't pay it. The seller would have to go ahead and take care of that. Okay. So it's got to be in a good position. It's got to be in good shape for our borrowers.
Okay, so this is a good house ready to move into.
Then they can go in and move into it, yeah.
Okay. All right, closing costs. Do they need to have closing costs saved?
They don't need the closing cost up front. The closing costs are already calculated into the loan. They have incurred the cost. They just won't be writing a check for them up front. But it is already calculated in the loan. Okay,
so now you said there's no monthly payment. Are they responsible at some point to make those payments or to pay that loan back?
Upon the passing of the last borrower, but they won't be. I mean, the house will, if they're going to sell it and move someplace else, then they would, and then we would get paid back when they sell the house.
Okay.
But if they live there for the rest of their lives, then it would just pass to their heirs, and the heirs would either sell it or refinance it, keep the equity, and then just pay the lender back whatever portion the lender had put up plus accrued interest.
What a great loan product. Why aren't more people using this?
Because they don't know about it. That's the great thing about this radio show and stuff like this. It just gets this information out there.
So this FHA loan, I know this is kind of new in the respect that here in Texas, our laws changed last year. Tell us about what we voted on and how things changed.
Well, this loan was made available actually, and it was signed into being in 2008, and it was made available in the other states. But Texas, we couldn't have it in Texas because Texas said the loan was only a refi. It had to be done as a purchase, and we were doing it as a refi. I'm sorry, our home equity laws said that our loans were refinance. Anyway, so what happens is this loan, when it was passed into being, our voters voted it in November the 5th. The governor signed it into being by the end of the year last year. It took a little bit more paperwork, get an additional contract addendum done for our real estate agents. That we got that approved April 28th. And so it's really just now gone live.
June 1st, really?
Yeah, it really has just now gone live for us over all the work. We were hoping it would be available November 6th, but it wasn't.
And you've been helping people do mortgages similar to this for a long time.
Yeah.
Very familiar with it.
Yeah.
And I know how to get people qualified. And you have tons of information you can send them if they're interested in it. How can they contact you if they're interested in this type of loan product?
They are welcome to call me, or they can refer to my website at HECMspecialist.com, HECM
All right, HECMspecialist.com. That's her, Vicki Cheers. She is with Security One Lending, and she's a HECM for Purchase Specialist. And if you are 62 or older or know someone who's 62 or older and they would be interested in this product, give Vicki a call. call because lots of great information. And you can talk to your realtor over at Register Real Estate Advisors, and they can help you as well to find out if this is going to be a good loan for you, to be able to have more purchasing power. That's what I love about it. It gives them more purchasing power.
Yeah, it's an exciting product. It's a lot of fun, too, when you see them looking at houses they never thought they could live in before.
Yeah, it opens up new opportunities. All right, you're listening to Houston Real Estate Radio, and we'll be right back.